and welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. Quite an interesting week. As usual, we're going to take a look at where the broader markets closed. And then also I'll share with you some of the news that drove price action last week. From there, we're going to dig in, take a look at those sectors. We're seeing a bit of rotation taking shape, and also be on some of those sub-industry groups that are starting to move and jostle around. So we'll take a look at that. So from here, let's take a look at those news last week. We did get some economic data earlier in the week that pointed to an economy that was flat, which is not bad news, considering this is what the Federal Reserve continues to be on the lookout for so that they can not have to raise interest rates. We saw retail sales rising only slightly. Industrial production did fall in the month of June, but this has been a theme with the industrial side of the economy. Also, we did see housing starts. They posted their largest decline in a year. But the real movement in the markets took place on Wednesday. A couple of factors, of course, you may well be aware, Tesla and Netflix both really declined sharply post earnings. We'll talk about that. But in the data front, we did see that weekly jobless claims fell unexpectedly. And this, again, is Federal Reserve related. They want to see jobless claims rise. Employment has been sticky. It's been high. In response, we did see a jump in interest rates. Yields rose. From there, we did see growth stocks come under selling pressure. And then also the Tesla and Netflix news also pushed the growth side of the markets down. And we also did see movement due to Monday's taking place of the rebalancing in the Nasdaq 100. There's been an effort to reduce the significant overweight among those magnificent seven, and that will take place on Monday within the Nasdaq 100. But we did see buying and selling ahead of that also pushed the markets around quite a bit. Now, next week is going to continue to be critical. The Federal Reserve on Wednesday will announce their rate policy for this current period. Also be on the lookout for Federal Reserve Chair Powell's comments regarding the possibility of increased rates going forward. And then also we'll get some key economic inflation numbers by way of PCE data due later in the week. That's personal consumption expenditures, a very closely watched inflation metric for the Federal Reserve. And then also Q2 GDP. We'll get that first print on that number, which is important. And of course, we cannot forget earnings. Lots more by way of mega cap names due to release next week. Amazon, Alphabet, Meta, among them. So you will want to be on alert next week. So let's go ahead from here and take a look at those broader markets and see where did we close for the week. And here we are with the daily price chart of the S&P 500. And the S&P actually fared well. It was up 0.8%, almost 1% for the week. It did pull back with the Nasdaq and other areas, but not quite as much. So the uptrend in this S&P 500 remains in place. We can also see that the RSI is in positive territory. We were able to dip just below that overbought position. This is something I talk about quite a bit with my MEM Edge report, simply because precedence tells us when that RSI is up there above 70, inevitably you can look for a pullback, modest or not, but that is very much the case. So we can also see stochastics up here in positive territory and the S&P well above the 10-day simple moving average. Net, the uptrend in the S&P 500 does remain in place. Now, from here, we can take a quick look at the Nasdaq Composite. And we can see this is a chart from earlier in the week, also had been in this overbought position with this daily chart of the Nasdaq Composite. We did see a pullback that was certainly more pronounced than the S&P 500. The index did close the week just below that 10-day simple moving average. That leaves that 21-day as the next area of possible support. Stochastics and RSI, both in positive territory. Now, let's go ahead and dig beyond this broader market view and take a look at the 11 underlying sectors here in the S&P 500. And this is where things get a bit interesting. We do have a 2-month daily price chart view. I've added that relative strength indicator, and we want to see on a relative basis how these sectors are faring. And this is something that if you do each week, as I do here every Friday, you can really stay on top of movement that's taking shape as it relates to money flows, interest among investors, and we definitely did see some shuffling this past week. First up here, financials, they've been on the move. They were up about 3% this week, and that's very pronounced gain for a normally staid industry group. And we'll go ahead and dig in from here as far as sharing with you where that strength emanated from. I'm sure many of you have a very strong idea, but one area that is new by way of entering a brand new uptrend is healthcare. Top performing group last week, up 3.5%. Take a look at these metrics here. Positive momentum shift here with the MACD black line up through the red. And we can see we had a nice multi-month base breakout in this industry group. Now, both financials and healthcare, I will tell you, their movement has everything to do with underlying stocks reporting earnings. And most definitely, these financial and healthcare stocks are very down and out when you compare them to some of the more high flying names such as Tesla and Netflix that came out. Not such a great response. So let's go ahead and move on. Take a look at some of these other areas that are beginning to ascend. Here we are with consumer staples. The group was up 1.8%, and we can see movement here as the momentum shifts into positive territory. So definitely we can point to a move into defensive areas of the market, but undoubtedly you will find other underlying reasons with relative to earnings coming out. Utilities, here's another area that also reversed their downtrend, heading upward, up 2.4% last week. I'm going to share with you several names in this group that I suggest that you keep on your watch list. The utilities, of course, are a broad-based industry group, but there are a select few that focus on alternative energy, and they're names that I've been quite successful with in the past and bear taking a closer look. Energy up here at the forefront, another top performer with healthcare. Price of oil is rising. We'll take a look at that and other metrics as well. We're seeing earnings coming in, and overall, the group is also entering a new uptrend after a pullback. Now, let's take a look at some of these groups down here in this relatively lower quartile, and we can see technology, discretionary, and communication services. Now, these were the three sectors that had been up there at the forefront for months. And here they are languishing down in this lower right quartile. Technology stocks flat for the week. We can see this pullback here. Uptrend very much remaining in place, but note it that we are seeing a pullback. Also, if we take a look at communication services, when you're looking at these sectors, this particular group was down 2.4%. It's really important to have a good understanding of the heavyweight names, those names that comprise a big percent of that group. In this case, it is Alphabet and Netflix. And both names were down. Also Meta. So those are your three big holdings. They account for over 40% weighting in this sector. And they both underperformed. Actually, Tesla down 7.5%. I'm sorry, Tesla does not count. But Netflix, Alphabet, and Meta on average down about 4.2%. So we can see what that did to this industry group as far as seeing it move down into this right side lower quartile. From here, let's take a look at some of these industry groups. I use ETFs to really stay on top of beyond those sectors. and you want to be aware of what's taking shape beneath the surface there. And again, RSI, descending order. And let's take a look up here at these top performers. First up here is IHI. This is a medical devices ETF. And this is another reason that healthcare stocks were on the move and a top performer. We are seeing strength here in the medical devices space. We can also take a look at biotechs, and this is a brand new uptrend taking shape here. This is IBB, the Nasdaq Biotech Group. Those are two areas and reasons why healthcare fared well. I'll share a third as we move forward. So also up here, we talked about financials and of course, KRE. This is that regional banking ETF that I've been talking about over the last few weeks. And you can see the significant move up 7.5%. Positive momentum, a little bit of a pullback here today, not entirely unexpected, but these bank names are generally coming in with good numbers. And I would argue an even higher relevant point is the fact that they are so depressed, certainly on a valuation and relative to their peaks in price basis. So that is making them compelling as well. Also good news for the economy. The sense that these banks are stabilizing is quite constructive. Now, as we move through these groups, areas you want to be aware of that did pull back. Actually, this is software IGV, the tech software group, and it actually ended the week flat. So not overly concerning there. But if we go ahead and take a look at semiconductors, they did experience a bit more by way of a pullback, down 1.5%. But take a look, finding support at that 21-day simple moving average, RSI MACD, still in positive territory. So I did talk, I think I said Wednesday, I meant to say Thursday, but the bottom line here is that the damage that was done appears to be nominal when you pull and zoom out that lens. So from here, I did want to go ahead and talk about some other areas outside of the US market that are faring well. There are particular countries that are further along in their ability to quelch inflation, squash it. And one area that I'll share with you right now is EWZ, the iShares Brazil capped ETF. And you can see it had been on the move here. And this is when I first did write about it back here, because just prior to this gap up, EWZ had come out with an inflation number that was getting the country quite a bit closer to their goal level. So we did see this nice move upward, a pullback, and then this week, a nice advance further. One other thing with EWZ, I'll share with you, pull up this full quote here and take a look. They do offer an 8.4% yield with this ETF. And then we can also see this MACD poised for the black line up through the red and positive RSI. The country is in the beginning stages of easing their monetary policy. So quite positive there. From here, we can take a look at a couple of underlying stocks in the Brazilian markets. And here we are with XP. They are an investment services company. Now, it is a bit advanced, but they experienced a base breakout yesterday. Nice high volume. Take a look at this MACD, black line up through the red, just beginning to signal a new uptrend in this particular stock. Another name that we can look at that is Brazilian facing is Petroleo, Brasileiro, PBR. And here we can see this was in line with the advance in that EWZ, a pullback, and it does appear to be in the beginning stages of reversing that downtrend. So keep that one on your watch list. From here, we can take a look further at XLV, and that, of course, is the healthcare ETF. And a couple of things names that I wanted to share with you. I talked about earnings being the primary driver of these healthcare names. So we'll take a look at a couple of pharmaceutical stocks that drove this particular group higher. First up here is Johnson & Johnson, J&J, and you can see the stock had been very depressed. I'll pull up a weekly chart to emphasize the fact that this is January, and we can see the stock had not made much in the way of an advance. but a big move this week, all about earnings coming in ahead of estimates. And then beyond that, today, we did see a number of analysts come in and upgrade the stock further. One other name that also announced this week, big cap pharma, Abbott Laboratories, similar move with this big pop and then a subsequent advance beyond that. Big high volume indicating potential further upside. So from here, I did want to share with you when a stock, for those of you that are perhaps intraday traders or you're watching these companies that report before before the markets open, and you want to see, are they going to advance further? We can take a look here with both J&J and ABT, and I'll share with you that intra-day chart that can be quite helpful in getting you potentially in front of these names before they have these significant advances. So we're looking at a 15-minute price chart with J&J. Here's that first bar on the announced earnings pre-open. And you can see that the stock, very, very big volume. That's one characteristic that would indicate a lot of demand for the stock. And then from there, you can wait, if you have patience, for that third bar beyond that first. And if it prints higher than the close on that first bar, statistically, that can be quite constructive. And also, we can see the stock is remaining above this 5 and 13 simple moving average. We did have a bit of a pullback later in Thursday. Thursday was a little bit of a jumpy day. But into the close, a move back above these moving averages. Most importantly is throughout this pullback period, you did have your RSI remain in positive territory, likewise your MACD. So quick look with ABT, you'll see very similar dynamics. And with that move on the open and advance, bit of a pullback, but again, as long as your momentum stays positive, you can anticipate further upside, which has and did in fact take shape. Now, another area we can take a quick look at in healthcare. I was going to share with you some names that are looking quite constructive as it relates to their movement. So let's see if I want to make sure. I'm going to go ahead up to this particular area, and we can take a look at some of these medical products stocks that I talked about. IHI looking quite constructive. This is Boston Scientific. You can see the stock had a gap up into a new near-term high, pullback, and potentially reversing that downtrend. Now, and a couple of other names outside of Boston Scientific, we can take a look at a large cap biotech name. This is Gilead Sciences, just in the throes of reversing its downtrend up above that 200-day, nice positive metrics on their momentum side. MCK is another healthcare name, and we can see that it had hit a new near-term high back here in the end of June, pulled back, and is in the throes of potentially reforming the right side of a base. Now, with this particular name, you will want to see this black line come up through the red, similar to this June period, to signal a new uptrend. Another healthcare name, and this company is due to report their earnings on Wednesday, is Quest Diagnostics. DGX, and you may remember this company certainly during COVID when everyone was getting tested. But this is another name that is potentially in the throes of a nice uptrend, your shorter term moving averages trending upward. And then last company is NVO, and this is a pharmaceutical company that is also in the business of weight loss medication. And we can see that it today, or over the last 2 days, certainly has reversed its downtrend, moved back above that 50-day simple moving average, positive RSI trending upward, and a MACD now in positive territory as well. Another stock, a little more well-known, this is Baxter International, BAX, and you can see in line with that healthcare sector, it has just moved back above this 200-day simple moving average, finding support at its upward trending shorter-term moving averages. I also wanted to share with you names that did pull back that are looking constructive. And this is going to be wide-based as far as what industry they're in. First up is ServiceNow, NOW. This is a software company that helps with primarily back office type of activity. And we can see that the stock pulled back with the group in right to its 10-day simple moving average where it found support. So that is what you want to see in these pullbacks as opposed to further deterioration below support that oftentimes will signal further downside. Another software name we can take a quick look at for educational purposes. This is ANSS. Very barely, but it did pull back to that upward trending 10-day simple moving average and remaining quite constructive. Last up in that software space is HubSpot. So again, this is the type of price action that you want to see on a pullback where it finds support at these shorter term moving averages and your momentum remains constructive. Other names that are not particularly attractive after pulling back. This is Dycom Industries, DY. And you can see once we break below these moving averages, pretty big volume, you get that RSI into negative territory. It's a much more difficult recovery. So this name does not look particularly attractive really on any level. Another name that pulled back and appeared to be finding support is Carnival Corp. This is a name and actually doesn't look particularly bad. This is CCL. They've come out with great numbers. The company talks about continuing to see huge demand. So a very nice uptrend pulling back to this 21-day simple moving average. Good news here, your RSI and MACD still up here in positive territory. So it is actually still looking okay. When you have a stock that has gone from $11 up to 20, you will expect at least some period of consolidation. So we're actually sitting quite nicely there. And then we can also take a look at a name that is going to be part of that Nasdaq 100 rebalancing. And this is SBUX, Starbucks. And we can take a look at this name simply because it is in the throes of potentially reversing its downtrend. We can see the momentum shifting to the upside and that MACD just getting into positive territory. So this particular name looking interesting, I would say. Now, I also talked about utility stocks, so we're just going to segue right in, and I'll share with you those names that, from my experience over time, they are very well run, and they also have a large component of their energy distribution coming from alternative energy sources. So first up here is Southern Corp. SO is the ticker symbol. And what I wanted to share with you is that we had this big move today up almost 3% that pushed the stock up above each of these moving averages and on very big volume. We did see that MACD get up there into positive territory with that RSI trending upward as well. But more to the actual chart pattern, I can share with you that the stock broke out of this flat base formation, a little bit sloppy, but nonetheless, this back and fill, we did see a base breakout. Pretty nice volume there. And then also we can see that I've talked about this, that MACD just getting into positive territory. So this would be certainly one for the watch list. From here, I'm going to go ahead and pull up that full quote so you can see up here. It talks about the yield, nice 3.75% yield there. Another name that we can take a look at in the utility space is NextEra. Now, this particular name is not ready for prime time because we still are below this 200-day simple moving average, which could easily act as upside resistance. But I would say put this on your watch list, a nice 2-day move on heavy volume. Keep your eye on that alternative energy utility name. And DUK is another one a little bit closer to breaking up above that 200-day. The other metric or the other action that you want to see to signal an uptrend is getting those shorter term moving averages trending upward. This is your 10 and your 21-day simple moving average. And by that, these moving averages become support instead of resistance on that downside. So we certainly do still have work to do here with DUK, but it's on my radar. And last up is not alt energy related, but they did have good news this week, and it is ED is the ticker symbol. And this particular name, by way of an example, has advanced above each of its moving averages. And let's take a look at the shorter term MAV, this 10-day crossed up above the 21, poised to cross up above that 50. That's known as a golden cross. Nice high volume on this advance and positive metrics on the RSI and MACD. So next up from here on that pullback side, I wanted to also share with you names I shared with you, certainly software stocks. We can also take a look at a name that has been on the move here of late and did experience a pullback here, very orderly. This is Caterpillar Tractor, CAT. And in essence, we can also from here take a look at the industrial sector. XLI is the ticker symbol, and it was up 0.9% for the week, only just a bit above the S&P 500. But I did want to point that out because in and among this sector, there are a number of names that are in very nice uptrends and still looking quite constructive. This is Huntington Ingalls HII, an aerospace defensive stock that's finding support at this upward trending 10-day simple moving average. Another name in a different industry, this is Cummins CMI, a heavy truck and equipment. Nice uptrend shaping up there. So a lot of times industrials, they're not going to get that exposure, or people aren't going to be quite as excited talking about it. But there are certainly a number of names within this group that are faring well and remaining in nice confirmed uptrends, FELE as an example. So one last name on technology is a name that did come into play this week. And first up, I do want to share with you that semiconductor sub-industry group. And we can see that we did experience a pullback, but there were names that actually were up this week. And one of them is Qualcomm, QCOM. And let's take a look. The stock is poised. Actually, it did break out of this nice 8-week base. Big volume today. The company did come out with news that Meta is, with their AI language, they are going to be running it using Qualcomm chips. So going to keep this one on the radar as well. And we're going to end it there. For those of you that like what you've seen, go ahead and hit that like button and trial my MEM Edge report using that link below. You'll want to stay on top of these markets. A big week next week for earnings, the FOMC, and a whole lot more. Have a great weekend. I'll look for you again here next Friday.